Despite rising the past 3 days, copper prices remain negative for the week after a major downturn on Tuesday following weak Chinese data. Falling Chinese manufacturing output has placed a damper on the base metals group, which are also facing a stronger dollar and fears over a global trade war. Even with optimism growing that a North American free trade agreement can be renegotiated before the midterm elections, there is little hope that the ongoing battle between the U.S. and China will be resolved anytime soon. That is threatening global growth and is a bad sign for emerging markets, which are already struggling to prevent a recession. But here in the U.S., the economy continues to show strong growth heading into the fall, with this morning's job report showing over 200,000 Americans join the labor market, keeping the headline rate under 4%. And better news, wage growth is starting to accelerate after years of weakness, translating to gains in the dollar and equity markets. For now, the accelerating pace of tariffs and tit-for-tat actions between the U.S. and China hasn't affected growth, but things remain tense between the two nations. For next week, there is a host of Federal Reserve member speeches before the Policy Board meets the following week. Market consensus sees the Fed raising rates in the next few weeks and once again in December, making next week a critical time for market observers. I'm Don Barker for the Metal Bulletin Group in Chicago.